Welcome, guys, to another podcast of ours, the Trading Talk. And in today's podcast, I'm very honored and happy to have a new guest with us, Felipe Guirao. I met Felipe in 2024, to be honest, completely randomly, thanks to the power of the internet. Sometimes traders meet, traders talk, and traders have the instant click or something like that, if you could say. That's the feeling I had with Felipe. We started our conversations, spoke several times since then. Um, and I'm very honored that Felipe agreed to join us to talk trading for today. So, Felipe, welcome to our channel. Great to have you here.
Vladimir, thank you very much for your invitation. It really means a lot. And as you said, we started talking ourselves about trading, and we really love trading each other. So conversation really flowed, and it was a great idea to really hop on a podcast and talk about what we love the most, which is trading, obviously.
You are right, and I couldn't agree more. I love to talk to people in my podcasts. Of course, I have a long way to until I can compete with Joe Rogan. But I love to talk to people that actually trade, actually went through the same sort of pain, if I can say it right this way, some sort of a sacrifice, some sort of a suffer in a way that I went through. And after our conversation, I literally had this feeling that me and you speak the same language, a language which a lot of people can relate to and can understand as they are going through the same things, just somehow privately, quietly, without anyone being that is able to actually understand what they're going through. So maybe it would be great if we can start with a little bit of introduction about yourself, about your trading experience. You were a former fund manager, and maybe you can share a little bit of your story and your suffer.
Yeah, of course. Yeah, it's been a long way right now. I started when I was 20 years old. I'm 32, so it's been 12 years since I decided to become a trader. It is a very long time, and I believe that most people go through many years without, going through the process. Becoming a trader really is one of the toughest processes that I've seen people can go through. I believe it's even harder than going, maybe a strong degree, which is difficult. Trading is something that, in my opinion, you really have to become someone else. You really have to learn to think differently. The general laws of life doesn't apply to trading. What you think is the right thing, most of the times it's the other way around. So yeah, the first 4 years, once I decided to become a trader, and everything started from my phone, honestly. When I was over there looking, at the stocks app, I was there and I was looking at Apple at the moment that it was just, I was looking at an intraday chart, and I saw like it was moving during the day with all of this line graph, and I was like, if I buy here and sell here and I could make this much every day, I'm going to be a millionaire by 5.
Oh yeah.
Everything started there, I believe most people can relate to that something really starts to spark and really starts to, the journey. And I am an introvert, maybe that's something common for traders, being an introvert, and that, hey, if I can figure this out on my own, I could be working from my computer. I don't need a boss. I don't need employees, which is something that really, the type of people that got into trading are around that stuff, that you don't need to have a boss, and you don't have to tell someone what to do. You can do it all yourself, and you take all the blame and everything. So that's where it all started. And of course, I started going there. At the start, I was looking at stocks, futures, forex, everything. Options was not too popular at the time. After COVID, options trading really skyrocketed, and now people have lower spreads and everything. But at the time, options was not something very common. It was not talked about, and I got started into forex actually. Forex, it was that's where I learned mainly everything about technical analysis. I learned how to spot trends. I studied every single technical indicator you could find. Your chart starts blank and you start to add more indicators. You want to trade breakouts, reversals, mean reverting strategies in trading.
Divergences.
Yeah. Yeah, and there's so many ways to trade that you need to find what really suits you, and that's a journey. And I believe that everyone has to go through it. Because ultimately, if you have the right data and you know what you're doing, you can make every single trading style out there. You can make it work for you. That's a good thing about trading. That you might have obviously went through the same thing because we talked about it. That you have to find, at first you have to try things out and understand what clicks with you, what goes with your strategy, the strategy that goes with your personality, what clicks for you. And of course there is everything you learn after, everything about expectancy, money management, risk management, managing your emotions, which everything that's the next level you start going through once you know all the technicals, which can take a long time obviously. But the big click for me, it really happens when I decided at the moment after reading a book. It's a very good book by Marshall Link. I don't know if you know it. It is called High Probability Trading by Marshall Link. It's a book that not many people know about. It's it's not praised on social media or anything, but it was a few chapters about system trading, backtesting, testing out sample data and stuff like that. And it really clicked from there. Once I understood, hey, I need to find something that works, but I need to derive a set of rules to trade with that they are proven historically to work in the instrument I'm looking at and on all different market conditions, because it's very common. I can assure you that you maybe went through the same thing, and I want to hear from you also from your mouth, but maybe it's very common at the start to get a trading system that has been working this month, these 2 months, where markets are either trending, they're ranging, and you're like, if this continues like this, I'm going to be a millionaire in 6 months, but then the market changes, conditions change, and then you see that, hey, if I continue to do this, I'm going to lose all my money, so that's the cycle that you have to go through and understand that systems work in different market conditions, and you need to find something that, or either trade something different in every market condition, or know when not to trade.
That's it.
I would like to really know your story, Vladimir. We talked about it briefly, but I would like to know what was your journey at the start of the beginning. I know it was tough.
It was very tough. A lot of that was similar to yours. You see, unlike you who trade stocks now, I started with Forex and I stopped in Forex. My journey, we'll briefly mention that I entered the financial markets completely randomly, spontaneously. I was trying, when I was a teenager, I was trying MLM, multi-level marketing. Of course, it failed big time. And yeah, I had the big dreams, the pyramid scheme and everything, that you're going to be a millionaire by the age of 20. Promises alone, reality always find a way to slap you and to awake you from your dream, right? And then one of the guys who introduced me to MLM, they started to make the physical seminars back then. You mentioned you're 30 age, or around the 30s. I'm 41, and when I started there, it's hard to say, even to remember, that we used to call the dealership, the broker, to make trades.
Oh,
there was nothing like that here. There was nothing like the platforms as we know them today, like MetaTraders, TradingView. That's something that sounds imaginary, right now. Back then it was like fun. And anyway, long story short, I attended to these seminars. I fell in love with trading right away. And yep, again, the same wish, the same dream of, now I'm gonna make my money. Quick enough, you awake to different reality after losing more and more and more and more.
Yeah.
Luckily enough, one of the brokers that started the journey back then, they were hiring, and I applied to the position. Luckily enough, I was good with mathematics and being able to catch diversifications and numbers and all that. So I passed all their exams, while all the other, I didn't have any degree, nothing. Never finished university, nothing like that.
Yeah, me neither. So
That's it. What would we do without trading? It's hard to believe, right? It's hard to believe sometimes. It's like it's a conversation I have with my wife and my parents sometimes. Like, thankfully, found trading in our life, so it's really. Anyway, I started working for a broker. After that, after gaining all the experience there, I started to think like, okay, I was trading the same way that these people, that the clients, trade. They lose money, so how can I make money? I have to change something. That's where I was first exposed to divergence trading. You mentioned a great book. I started my reading from Dr. Elder. He has great books as well in trading and psychology. And then I started to
divergence. So with the MACD, it's awesome.
Yes, exactly. Dr. Elder, great, absolutely fantastic author and speaker. I met him several times also. Brilliant. And then I started to see how I am going to take it to my place, because I'm like you. We are lonely wolves, right?
Exactly.
We have to do it our way. We have to suffer our own way. We have to do our mistakes, not someone's mistakes. That's how we study. Today, I can say I wish there was someone that offers a guidance like we have in Home Trader Club, like you have with your community and your reports, which we will talk about later on. Some guidance, but back then it was not available. And what was available was not affordable. I didn't have the money back then. So I had to go through the hard path. But maybe that's the best path, because, if you go through, if you fall down 10 times, but you stand up again 11 times, you will probably make it to the next time where you are able not to fall down. Right? And in boxing, I was training boxing when I was a teenager. They always teach you, first of all, don't get knocked out.
First rule.
First rule, don't get knocked out. As long as you survive in there, your chance to get knocked out it would be much bigger.
Well, in trading, I would say that the first thing you should be looking, if you have to do one thing today that would change everything going forward, if you're losing money, just don't risk more than 1% per trade on your trades. It's just as simple as that. If you don't risk more than 1% of, and this rule goes very deep, because some people, they don't even have a predefined risk per trade. That's another problem that is even deeper, But if you're using stop losses and you use some risk management of some kind, and you don't risk more than 1%, and you're not doing dumb stuff, it's very hard to go broke. And you will get through it, because one of the main problems that I've been going through, and I'm sure that it happens to you the same, that in the beginning, I lost 35K trading, just blowing accounts at the beginning. And there is a way to learn where you don't have to lose that much. There is just not risking more than 1% per trade. If you just do that, you're not going to lose. You can learn and not lose so much money. That's.
After years of experience, and I always love to tell my students I work with, especially privately, if you don't want to lose everything, don't risk everything. It's that simple.
Exactly.
It's that simple. And if a certain percent puts you in discomfort, puts you in a place of you're not comfortable with the size and the numbers, that means these numbers are too big for you. Go smaller. And nothing wrong with that. And as soon as people learn to deal with it and understand that, things start to work differently.
Exactly. Yeah. And the other thing is that, I'm sorry for these sirens here, where Collins Avenue in Miami, it's just a mess. The thing about is that people should also, once they start to learn the distribution of their system, start to know what is their max drawdown, what is the equity curve path of their system. It's very easy to see how much you need to risk in order to get the returns, and you will also see that based on your risk, how much of a drawdown you're going to make. I see people that they're trading things and they're risking like 2.5% per trade. And if they just knew their distribution, they would know that it would just be a normal thing for their system to get a 40% drawdown. And once they get it, they say, hey, my system doesn't work. So it's just, no, you don't know your system and you're putting too much risk on that. So that's another, another dimension. And following this simple rule, don't risk that much. And if you need to risk more than 1% to make capital gains in order to, make money or whatever, you should be doing something else. There's nothing wrong to having a job and trading at the same time. There is nothing wrong. Absolutely. I mean, if you have to risk more than 1% to get to your financial goals, well, your trading account is too small, or you need more income. It's just as simple as that. I mean, when people open a trading account with $3,000 and they want to live off that, it doesn't happen. It's not. Absolutely. You will have to risk 10% per trade in order to do it, and you're risking blowing up in 1 week. So it won't work that way.
A lot of times the conversation I have with students is like, when do you reach this level, this place where you are able to live for trading? It starts with definition. What's living is for you. For some people, $1,000 a month is enough. For some people, 5,000. For some, 15,000. For some, 100,000 is not enough. So yeah. It really starts with the definition. Of course, theoretically, when you start making money, it's never enough. You always want more on everything. Yeah. And that's here. Once you learn to control that, and you learn to deliver the numbers you need, you are able to do it properly. You know the numbers. Of course, it's average because every week and every month is different, right? But on average, you know what you are looking to deliver per month or per quarter, and that's your focus. Long-term games, stick to the numbers. Like I learned with myself what I need to deliver for my family. That's it. Of course, there is always a temptation of making more, and theoretically, it's endless. But then you are married to trading. You never can leave your phone. You never can leave your platform and everything. For me personally, trading was always about the freedom it brings. Yeah. Not the financial freedom, which is also a gift, of course. It's great, but the freedom in terms of time. Do it as much as I need, and not as much as I can. Otherwise, the more you are exposed to that, the bigger the chances you will do mistakes. The bigger the chances it will take you to the negative places of trading. And then we know how it can affect, right? Once this part is ruined or disturbed, that means that your performance would never be the same. Let me ask you this question. How long did it actually take you until this point that you can say that you are a profitable trader?
4 years took me.
4 years.
Yeah. The exact number, of course, I can't tell you, but 4 years, I would say it's definitely, it was 4 years. Yeah, it was very painful. I lost money, and I learned a lot during that process. But thankfully, although it took me 4 years, for some people it takes less. For some people it takes more. There's some people that do it for 20 years and continue to lose money. That's another story. But in those 4 years, I would say that to reach the turning point, which was learning to trade against the data, that was the turning point. It took me a very long time because I was in this cycle that I believe many people are in this cycle that once they get a system, they they trade it because they're seeing their charts that are behaving a certain way. They make money and everything. The market changes, boom, they lose maybe everything. They lose most of it, and they continue to trade that same system on different market conditions, and they continue to lose. So then they say, hey, I need a new system. I need something else. And they just continue building new systems, and those systems eventually fail. They are not failing. They're not working in the moment they're supposed not to work. And sometimes people have profitable systems that have very stable equity curves, but again, they don't understand the distribution. And for that system, for the risk level they're taking, it is very common to have a 15% drawdown. And those people, maybe psychologically, they can't tolerate more than a 10% drawdown. So they get a drawdown, they say this isn't working, they find a new strategy. But the strategy is working because trading is all about a law of large numbers, and it is a big sample of the distribution. I have to go through the distribution. I mean, I have losing months. I'm profitable 87% of the months on average. That means that 2 months of the year on average are going to be negative.
That's amazing numbers.
Yeah, and well, I'm going to talk later how all the journey brought me to trading stocks and what system I trade in order to get this type of returns. But the whole objective was to get a low drawdown and have a percentage of profitable months as high as possible in order to be comfortable in my mind that you can just leave a little bit of wiggle room that say, hey, a couple of months of the year you're not going to make money. That's pretty normal. Obviously, that there are profitable systems. I used to trade futures before a few years ago where I have huge, average returns per year, but the risk level was too high. I have big drawdowns, and although the system performed amazing for 8 years, there was a period that 1 year the equity curve went up and down, but stayed the same on the same levels as the start of the year. So getting most of the year to get your account to compound and move forward is very important. 2024, the only month we got negative was September. It was a minus 4.5% month, and that was the only negative month. In fact, on October we did 9%, so we took all of the losses back and more. So it's pretty stable, and that's the main objective over time in these 12 years was to get a system to be as stable as possible in order to get those returns and obviously live for myself and continue and have a room to continue to compound my account, obviously. And as you mentioned at the start of the video, I'm still managing a small fund. It's friends and family and friends of those friends at the moment, but it's
That's how it always starts.
yeah, it's like a boutique fund and everything, but I'm applying the same system on them, and it's very, it's low risk and everything. And that's, the evolution that got me to that point. I've been through a lot, so yeah, that's that's what I'm doing at the moment. But
what was the one thing, if there is such a thing, that actually flipped it for you from the suffering trader to the one that consistent trader?
well, backtesting a strategy and knowing what to expect in the future, that was the game changer. That was the game changer, because when you know what to expect once you're trading, as I said, you don't bail out on a strategy because it has a drawdown. You know that drawdown was going to come. So if you expect things, you have no surprises, and you know what you're getting into. That was the turning point. That was the, from trying to learn every single strategy to saying, hey, this is profitable. What is going to be like in the future? And if you have no surprises and you stick to it, that everything changes, and you need to have the patience to execute it and wait on that distribution. If you know you're going to have, for example, a 3-month drawdown of not making money, well, you should expect that, and if you go through that, you need to have the patience to go through that. And if you can't do that, that system is not for you. Simple as that.
Absolutely. Well said. That's this is something you come to this realization, to this understanding after a certain amount of bad experiences. And as we know, what is experience? Experience is just a name we give as people to all the mistakes we did.
Yeah,
right?
Mistakes and struggles. Yeah, 100%.
To summarize all these mistakes, we call it experience. That's as simple as that. But once you come to this realization, you are able to do things differently. I agree. If you could go back in time, would there be anything you would do differently after knowing everything you went through?
After knowing everything, yeah, exactly. Well, I believe that there is a small cycle that I believe it was necessary, maybe, to start finding the strategy that matches my personality and my needs. That's something that, it was a struggle, but I believe it's a kind of small necessary struggle. The point in trading is that how long are you going to take that struggle going forward? How much are you going to stretch it? But some things, I would change, obviously, is coming to the realization that I need to backtest a system before trading it. If I just have, do that, I would have found an edge, which I found many edges, but I didn't stick to it because I didn't understand the statistical mindset to do it. If I could have acquired that statistical mindset of knowing what a distribution of a system is and how to have the mindset to execute it moving forward and know what to expect, no, that would have changed everything, and probably it would just have cut in half all of my suffering for sure. Instead of 4 years, I could have done everything under 2 years, I guess. Yeah.
Yeah, that's a good point. This question always something that I keep asking it myself. If I could, would I do anything differently? So probably, yes, similar to what you said, I also would mention that I back then I had this mindset that I know better
Yeah.
and it will never happen to me,
Yeah.
And I heard so many of great experienced traders saying don't do specific things like as we discussed already, risking more than you could, always protecting your positions if it's per trade, if it's per day, if it's per week, but always have limits. And in my mindset, I was like, yeah, fine, I'm under control, right? And at some point, you come to a realization and understand, man, you have to stop doing it. I also had in the past more gambling sort of personality, and I used to believe that if you don't take the risk, you can't achieve the rewards, which is true, but also not true. It doesn't mean you need to risk everything in order to start get things in your way. It's not an all-in game, and not every hand you play it's an all-in. You need to be able to compound. You need to be able to compile these things together and understand the rule of compound. Right? It goes slow, and then boom, explode. And it probably would cut me also some years of pain and some years of money. But again, no regrets, of course. That's the journey we had to go through. And I really believe that one who does not give up on the way, doesn't matter how many times he falls, if he chooses to stand up and try again, eventually will reach this place where they will be successful. And I personally believe in the saying that, I will make it or I will die knowing I tried my best. There is no way I'm gonna give up on the journey. And as soon as I realized that trading is mine, trading is something I feel comfortable, I feel good with. I always was good with numbers. I don't say it's essential for trading, but it definitely helps. And I was always being able to see the things that others don't. That's why I stopped on divergences. And trading, as you said, against the data, very, very important. Not to rely on the data, not to rely on necessarily what the charts are showing or the numbers are showing, but try to see the things differently. That's why I love cycle trading with divergences. We mentioned before, you trade stocks.
Yeah, I wanted to say something about that because I've been trading through in my years. I started in Forex and everything, and I've seen that trading systems works different on different markets themselves. Divergences, they work really, really well in Forex, commodity markets, because of and on stocks behave completely different, and momentum breakouts work wonder. I mean, they work perfectly well. We're talking about excellent returns. I'm going to show that later, obviously, but I'm going to show all of the trades and returns. But on Forex, for example, you see that, and I believe that these are things people don't understand, or maybe people don't know. But for example, in the markets, on futures markets, the participants that they are buying and selling, they're not just speculators. There's funds, buying and selling, they're hedging, there are companies buying and selling Forex to hedge their inventories against other countries. There's a lot more, not everyone, most of the people are not buying to profit from, in the Forex markets and everything. So that creates these cycles, and prices tends to be a lot more, I don't want to say mean reverting, but it's very, uncommon to see a very sustained trend with very low volatility over time in the Forex and futures. It's not that common. And that's why, for example, divergences, they play really, really well in Forex, in futures, they work amazing. And if you try to trade divergences, the same system on stocks, it's going to be very difficult to profit, because most of the times stocks are moving in a very low volatility type of trends to the upside and on to the downside. Because again, I go long and short on stocks, which is not something too common, but I ended up trading stocks this way, and I'm trading momentum breakouts just because I believe it's a personality thing. And answering the question, how did I actually end up trading stocks? It's just because I analyzed 9,000 stocks in the past 3 decades, and I figured it out that they all move in a very similar fashion, because stocks, when no one is paying attention to a stock, it just moves in a choppy range. It just does nothing. Once it gets the attention of Wall Street, of people, it starts to explode. And these trends are very, on the first leg of a major trend, once a stock is discovered and there's a lot of volume coming into it, on the first consolidation, again, I have all of my rules. I will show some charts later on that it's very predictable. And if you have a lot of data, historical data, to know the type of rules you need to know to trade them, they're very profitable, and the risk reward on their trades are great. And the average win against the average loss is excellent. Success rate is high, but you need to be able to do it on those specific rules that I developed for myself, for example, and also knowing what type of market you're trading. That's another very
absolutely
thing.
You mentioned something great, because I trade stocks, but not as the way I trade Forex. For me, it's more than 90% of the trades is Forex. I love stocks, especially on a higher time frame. Because that's where the money flow is more reliable and divergences are more reliable. But what I found is basically connects to what you mentioned. Divergences, when you try to go, especially against the market, it's doomed to fail more than it works. However, once it does, it brings huge moves. But divergences in general go with the direction. So if the trend is up on specific stock, look for this pullback, look for these divergences at the end of the pullback, try to join the bigger trend. It simply will give you much higher probability.
The divergence within the consolidation, within the context of the higher trend. Those trades, they were great on stocks.
It was fantastic. And in terms of Forex, you're right. Forex is two currencies in a pair. Unlike stock, which is a pure value or manipulated value of a company, but it's unlike stocks, right? Forex is different because it's currency against currency. It's economy against economy. So it has to be much more measured, and the movement is much more, as you say, from edge to edge, and it's not so common to have crazy trends or straight momentum. It happens once in a while.
Yeah, it happens.
But 70% of the time it doesn't, and that's why reversal strategies like divergences in cycles will work more better than in Forex. Now, you mentioned your strategy, which is super unique. I have to admit, since the moment we met in 2024, I started to read your reports. You got my attention back to stocks. I started to follow more stocks than I used to in the past 7 years, man. So that's rare. So well done to you. You make it in a very simple way, straightforward. Yeah. And that's why I even find myself like, okay, that's interesting. That's something I didn't do. That's something I didn't look at. So maybe it would be great if you can show a little bit of your strategy, some examples. Talk about the rules or anything like that. Maybe some numbers, how many trades per month you do, an average return, stuff like that.
Yeah, I have all of the stats right here. I'm going to share my screen right now. This is very similar. This is my service, but right here I want to show you my strategy itself. Is everything laid out here? Some passing on the examples, and you were talking about that. The cool thing about it is that you could be doing, allocate a certain percent of your portfolio to the strategy, another percent of your portfolio to your Forex trades, so you can have your equity curve. If you have a big enough account to do it, obviously, in order to make sense, your equity curve could be super smooth because you're trading on diversifying on strategies and on markets. That would be the ultimate thing to do, obviously. It requires a little bit of work, but it is.
By the way, Felipe, I want to mention to the viewers, to the listeners, Felipe will be presenting now his strategy. If you want to learn more about what he is doing, how he is doing in his trading, then just check the link below this video in the description. You would find there the direct access to what Felipe is doing. You will be able to see all the numbers and the descriptions in much more informational in your comfort. Sorry, please continue.
Yeah, sure, of course. And if you go to that link, it will go directly to this page to see everything I'm seeing right now, so you can see it again and study it on your own if you want. Now, 2024, the strategy, and I'm going to show you right now, go into charts and see some examples and show the strategy, the overview, but it's really momentum breakouts. We go long and short, so we profit when stocks are going up and when stocks are going down. The only moment where the system underperforms a little bit is on very, very choppy periods of the market, which again, it's 1 to 2 months of the year. So because stocks ultimately they're going up or they're going down, there are very few periods where they're really going nowhere. But the system itself, you can see that the return for 2024, we're talking about 106.89%. And of course, the max drawdown.
Mind blowing, man.
Yeah, exactly. And the max drawdown, which is the most thing I'm proud of the strategy, is 5.35%. So you get the returns with that drawdown. Because I believe that a trader does a good job when he gets a return relative to risk. The risk-adjusted returns, it what really matters, because it's very easy. You can see on all of these competitions on stocks that people have like 500% returns and everything, but they don't show their drawdowns. If you want to have a 500% return, it's very, I would say, just a matter of a statistical thing. The distribution of a system, you will have to endure 50% drawdowns with your eyes closed, which again, it's not for anyone. So that's what I'm proud the most, is the drawdown to the returns. Number of trades, sorry, on 2024 was 200 trades, which again, it averages around 20 trades per month. This is an average over the past 14 years.
And that's what I saw also when I followed your reports, yeah.
It's a little bit below average on the number of trades over the year, but it stays within that limit most of the times. Percentage positive trades of the year was 67%. Our average is 65%, but still it's very close to the average. And so we are counting break-even trades as positive for people who want to start to see the reports, obviously. Then the average profit per trade was 0.39% if you're risking 1% per trade, just like I suggest people do. Of course, once people they follow the trades, if you have a very big account, you can risk less than 1%, and the drawdown and the returns will be lower. But I believe a 1% risk per trade is perfect. Still, it's a very low drawdown. 5% drawdown is very low, and you get all the upside. That's the whole point.
I admit I never managed to get these numbers with such a small drawdown. So. Thumbs up.
Of course, it was a good year. 2024 was a good year for stocks, but the fact that we are still going long and short, we did an awesome return on 2022, even when the SPY was 30% lower and all of the indices were lower. So, and I will be publishing all of the reports of the previous years, so people can see all of these monthly detailed reports of every year from the past, or at least from 2020, and preparing them. So it takes a lot of time, but it will be on the page sooner or later. And you can see that in the first quarter for sure. So then there's the monthly detailed reports. These are every single trade, the signals I've sent, which are executed, and there is the result of each one. So you can go and check each one by yourself. On January we did for a little bit over 4%, February 5%, March was a big month. It was over 20%, and then April 13, May 11, June 6, and again September was the only losing month of the year, minus 4.5%, and this was the time where September was very choppy in the markets. It tends to be, on stocks. September tends to be one of the seasonal years, which is the worst. There's a lot of volatility and everything, but still, on October we made it back and more. November and December were quite choppy. December was very difficult to trade. Actually, we're talking about that just last week. It was such a tough month. We managed to get ahead with a 1.11%, but it was tough.
My worst months of 2024.
Yeah, it was very tough in all markets. December, I don't know why, but it was super tough. A lot of volatility, but
very not technical. It was brutal. At some point, I had to say, I just stopped trading these months. Otherwise, I will ruin my whole year. So, what's the point, right?
Yeah, exactly. Yeah, knowing when you have to cut off your strategy, it's super, super important. It's super important. And the good thing that when I developed this system, the cool thing about it is that it has integrated rules between what is going on the markets, because the system will get me short when there is short bias in the market. They will get me long when there is long bias, and when it is choppy, it will get me into some trades. But ultimately, 1 or 2 months of the year are going to be negative. But in the overall scheme of the year, it's really nothing. I mean, we made it back in 2 weeks after the September close. So once again, it's not a problem. I never seen a system that makes money every single month. I've never seen one. So I'm pretty happy with the results anyway. So
you would never see one because it doesn't exist.
It doesn't exist, of course. I mean, even day traders that say, well, if you go lower in time frame and you become a day trader, you get more frequency and you can make money. Well, that's not true. I've never seen a day trader. Well, I've seen few day traders that trading the scalping the 3-minute chart and everything that make money. I've seen few. I see more people making money with a slightly higher time frames than that.
Let me give you a great example on that. When I have this conversation, I always love to compare sprinters or the shorter runners, like Usain Bolt, for example, or the marathon runners.
Yeah.
The marathon runners, they don't run every day. I mean, they don't run a marathon every day, right?
Yeah.
They do all their workouts that leads them towards these runs. However, the shorter or the short distances runners, they don't run marathons when they train. They do what they do in a different frequency, in a different trading, and it's absolutely not logical for people to expect you can compare day trading or something.
Yeah.
Sorry. Frequency is absolutely much bigger, but also the risk, and also your ability or possibility to lose control. Because the more you are exposed to that, and the more the market zigzags against you, the harder it could be in time. And for most people, it would be tough without a very specific plan. It would be very tough to be able to stick to that and to stop a day. Let's say you reach 5% drawdown in a day.
Yeah.
I know many day traders do work in these sort of numbers. How many people that can actually say, you know what? Fine, I lost 5%. I'll just come back tomorrow.
Yeah. No, it's so difficult. No, it would be. Yeah, I mean, I trade in my early days. I tried day trading. Obviously, I traded, and maybe I can get 3 loss. I can get a 5% drawdown. I can get it in the lapse of 2 weeks. That's one thing. But getting a 5% drawdown in one day, I couldn't even imagine what would that be like. I mean, if you have 5 losses in a row, risking 1%, and you are having 5% drawdown in a day, in a morning, in a trading session, and then another signal comes up, are you going to execute the same way? Is your finger going to tremble? I mean, it's just, even if you're working with big money, with accounts over 100,000, it will be something very tough to do.
Absolutely.
Super tough to do. And my view is that I learned pretty early in my career that, hey, if I can make the same or even sometimes better returns than day traders with higher time frames and spending so much less time in front of the charts, why? I know some people, they like day trading and they can make a lot of money day trading and they can't make money with higher time frames. But in my experience, this is just a minority. It's not the norm for most people. So for the majority of people coming to trading, it will be the hardest path to go through. That's the point. You're just going on an uphill. It's
also very important to remember that for one person to win $100,000. 100 people will have to lose $1,000.
Yeah.
it's a zero-sum game after all. Doesn't matter how we twist it, right?
Exactly. Yeah.
So
exactly.
That's important. Now, what would you say your strategy is based on, technical-wise, right?
Technical-wise, well, let me just quickly go through what we're doing right now on January.
All the reports, yes,
because most people will be wondering, well, we started with a correction in 2025. Well, right now at the moment, we are a little bit over profit. It's been very choppy. The conditions on January starting off on the first 2 weeks are very tough, but we're still managing to get a profit, which is nice. Most people on stocks, they are complaining about the current conditions and everything. We're making money. That's the whole point. So that's just an example of what a report looks like in the morning once people get it every morning. But I want to go into the charts right now. Let me just switch on the screen.
There was no new signals there, right? It's no new trades for today.
No new trades for today, exactly.
By the way, it's very important to say, maybe for the listeners, while you're uploading the charts, Felipe's reports are absolutely, I don't know how you do it, by the way, but absolutely geniusly combined for people who have regular jobs or businesses or life that is busy or too busy for trading, meaning the reports come every morning around 8:30 a.m. EST time, New York time. You have about 1 hour to get the report, to prepare your trading according to Felipe's rules, which he has in the manual. And that's it. You set a trade, you let it work. No technical conditions, nothing like that. So it's absolutely perfect for those who actually have jobs or businesses that require most of their attention and they are unable to look through the charts during the day, all right, throughout the day. And I don't know how you do it, man, because in Forex it would be, I would say, impossible. You have so many stocks and so many not enough pairs to trade only day charts for that frequency. So
yeah, I think I found a balance between everything, between the risk, the returns. I know that I always start with the risk, the risk, the returns, and the time commitment. And that's what 12 years came to this point. So there's a lot that have been going through up until this point. But yeah, and also, I have all day to trade if I wanted to, and I don't. I follow my own system, which is, for people, it's 20 to 30 minutes in the morning to log on the orders, and you don't have to do anything else. Everything is automated, the stops, the entries, have to close manually a trade at the end of the trading day, which you can also do with an automated orders in interactive brokers if you're using the right broker, which again, just like Vlad said, I put everything in a manual, so you don't even have to think about it. If you do everything, you take the daily report in the morning and you just log in the trades, you're going to make those returns and you don't have to do anything. So that's the whole point, to help people, grow their accounts while having a job. And subscribers that actually do that, they tell me that it's the first time that they have encountered something that they can actually profit trading stocks and while having their day job, which is really amazing to have an email like that. It's awesome. So
I'll say you got my attention, and that's very hard because you can imagine to how many people I talk to. Everyone has something they want to share, to promote, whatever. It's impossible to, of course, to pay attention to everything, but some things get your attention and get your go. You managed to get it, and I admit I'm not into the stocks in that way. You got my attention, and it's beautifully the way you do it on a daily format, every day, same time, around 8:30 a.m. You got your 1 hour to check and see, and simple. So well done. Just keep it up for people. They will love it, man. A few words about the strategy, if you don't mind.
Yeah, sure. And just a quick mention that if you go and check it out through the link that it's below here, is that we also offer, which is unheard of, a 3-week trial. So you can actually try the service for free, and you have a 70% chance to make money before you have to pay anything to get the reports in the morning. So again, it's also, I designed it to be a win-win for people. So it's really designed, to help people, and that's the whole point where we are doing this. I want people to grow their accounts. We want people to profit. We want people to stop losing money just by following, all this betting on options that is going on right now, the craziness that is going on in the stock market, and bring people to bring their accounts up and just make money. That's the whole point of this. So now going into the strategy itself, I'm going to show you that my strategy itself, technically, it's kind of simple because there is a lot of process that goes around this, which is scanning for stocks at the end of the day, and it goes through a whole process, a whole point of technical things that need to be happen, and based on the breadth on the market, I decided which signals to send out. So there is like a 5% discretion on this, but the setup on the technicals, it's very simple. The whole idea on buying a stock and setting it higher, or shorting a stock and buying it lower. So everything starts with a trend. Just quickly going through this, you can see, I will have to change the color on these lines to black. So you'll see, this was a trade we took right here on December. It was a great trade, a trade that actually saved the month on December. That's why it's a great example. on the 16th of December 2024, you can see that a stock is really, that's what I was saying. That stock is doing nothing. A stock is doing nothing. It got nothing, the attention of anyone. And all of a sudden, we have a huge spike and a new trend going higher and a lot of volume coming in. You can see that 473.4 million shares traded, although this was a stock that it is around, they are 50 cents. But it still is a lot of money, a lot of inflow going into the market just in an instant. So once that happens, a new leg of a new trend is established. I have the 8 exponential moving average, the 20 and the 50 stacked up in an uptrend manning fashion. The slope on it is just insane. So this shows a lot of momentum and buyers going into it. And then what I want to see, also a very important thing is this is a custom indicator I actually built that it's based on a lot of testing on thousands of stocks in the past. That it shows it tracks momentum and linearity, because not only you want to see in a stock momentum, which is this big surge higher, in this case to the upside, but you also want to see linearity, because stocks can move higher, but in a choppy fashion. And if you try to take breakouts in choppy stocks that are still going higher, even in uptrends, you're going to get chopped out and your stop loss is going to get hit all the time. So we filter out those stocks with this custom indicator I built, and it's just done automatically. So first leg higher, you can see that bulls are clearly in control at this point, and then the perfect consolidation comes. And this is that where you, of course, if you have consolidation with a divergence right here with MACD on the lower side, that's where you will get an awesome point of entry. That's not what I trade, but I know it works really well looking for those divergences in a consolidation within the context of an uptrend. So context is everything. As we all know, context in a setup, technical setup is absolutely everything. So on the consolidation, obviously, buyers start to take some profits at this point, but you can see the accumulation starts to go off and a perfect volatility compression pattern emerges. All of the candles being so small, it means that when everyone is selling into this, buyers are continually stepping in. You can see the wicks on this candle, so there's a lot of buyers accumulating in this area. Volatility contraction pattern actually forms tight day before the breakout, and then you have this bullish candle which just shows the breakout. Again, I have to play this in black. You have the breakout candle right here. So this is a signal we took. We place a buy limit a little bit above the close of this candle. I don't remember the exact prices, but you place your entry on the breakout day around the close of the candle. Signals that obviously bulls are now going for that second leg on this trend, and the stop loss always goes below the low of the day. That's a cool thing, because in stocks, in order for your stop loss to be taken out at the low of the day, it's something that in this case, the whole market needs to really start going lower in order for your stops to be taken out. That's why we have a very high success rate, is that stocks work this way. This is not something, a magic thing I do. This is the way stocks work. And that's why one of the many reasons I actually settled on this system is that.
If I may, Felipe, while you are explaining it, I'll take the screen for a moment from you.
Yeah, sure.
As I want to show people how that actually looks like. Do you see my screen?
Yeah, I can see it.
I opened the report that you sent, and this date, it was 17th of December, right after the 16th of the candle that was closed back then.
Oh, you got it, yeah.
So I just wanted for people to see how it looks like. So it's not like, words to the air, but these are actually the reports. The way I received it, Felipe got me this, the reports, of course. I was testing throughout the 2024, and here you go. That's how it looks like. This is the report. This is the trade we discussed. There are some others on the bottom. That's how you receive it. Candle, entry, stop loss. Where do you move to break even? Maximum share. Everything as per Felipe's order. But that's how it looks like. As simple as that. 8:30 a.m. in the morning. That's what you receive based on a daily candle. So genius. What can I say?
Yeah. I mean, although this is a great example. Yeah, it's very simple, and also in the manual. It's explained very clearly how to submit the orders on your broker. You take those prices and you just type it in on the brokerage and hit enter. It's very simple. I mean, so simple that even a 10-year kid could do this. I can assure you that if you just follow the rules, and also to calculate your risk. If you just you have to take your risk amount and divide it by the distance of the entry to stop. You get a number that is your share number. You're risking 1%. It's nothing complicated. And as long as you do what the reports do, you're going to make money. It's just as simple as that. I mean, it's not too much.
You mentioned 10 years old. Here's a funny story. During the holidays, my kids saw me working with the charts and everything.
Oh, that's
and
nice. That's nice.
Here is a funny story. I was going throughout your reports, and they saw my chart and they looked at that. So my son came to me and said, "Whoa, how do you read your charts? Like with my divergences and cycles?"
Yeah.
And then he saw this report, and my son, he's not 10, he's 12, but he said, "That's simple. That's what you should be doing." And I was laughing here. I said, "You really understand?" I said, "Yeah, it's simple. It's green. It's buy." And I don't know how it's in different schools, but the teachers here do give them, well, it's kids, right? So you don't teach them financial markets, but you do explain them a little bit. They do explain him here a little bit of the financial markets, what is buy, sell, something.
Oh, that's so cool. Yeah.
They are familiar with that, and he comes to me like, "That's simple. You should be doing it this way." And I'm like laughing here, like, okay, that's an advice for my son. I probably should stick to that.
How do you see your son? You know, in 2 years, you allocate capital, he gets a commission.
He asked me already. He asked me. It's funny, but he asked me one day, like, what should he do when he wants to start. I told him, "Listen, the first money I'll give you, you will do your practices, you will do your mistakes, so you don't blow up your money. I'll give you the money to work with, like my parents did to me, right? It's very similar. So we will see. I don't know if they will want to trade or not. I would definitely want to give them this opportunity.
Yeah, it's an opportunity. Yeah.
To be exposed to that. From there, it's their decisions.
Yeah.
I'll give them everything they need to know, and they will decide if it's for them or not. Time will tell. Right? Yeah. When I was a kid, I even didn't know what trading is. So
they are lucky to have you as a father, honestly. I would love to have a Vladimir father like you when I was 12, you know? Yeah.
Thank you. Yeah. So is there anything else you were sharing your screen and I then took it? Maybe you want to...
Yeah, just maybe close on I was talking about the entry, just show the exit on the trade, just to show it's very simple. Just at the end, you can see after the entry, stop loss is always below the low of the day on longs, same as shorts, and we exit always at the end of the 5th day. So 1, 2, 3, 4, 5. At the close of this candle, at the end of the day, we close our trades, and this was I did not exactly remember the numbers right here, but it was like a 5-something% trade overall on the account, and this.
I think it was the best trade of the month. I think.
Hey, I'm sorry.
I think it was the best, or maybe one of the best trades of the month.
Yeah, it was actually the trade that saved the month and put it on the positive ground. So that's why this is a great example. You know, not every trade is going to give you a 1 to 5. Obviously, this is everything. It's an average. You can go on the web page on the link below and see all the reports for yourself. There are 1 to 5s, even some. Let me know some months there are some, but it's not the rule. And just another quick, I will do in just 1 second. A couple of shorts we took. That the same works the same to the short side, you know, big leg lower, the start of a downtrend, and of course the consolidation was right here, compression pattern. Every single rule just flipped to the lower side. The custom indicator will be flashing green because it doesn't care if it's up or down. It measures, you know, momentum and volatility. We took a short on this day right here. I believe this was a break-even trade, just to, you know, show what can actually happen. So yeah, this was on this day we moved to break-even, and we close on break-even on this day, close automatically. So just to show you exactly that this can actually work also to the short side. I mean, the short trades, they work the best when you have big corrections. When you have these choppy, you know, down moves on the markets, they tend to give some profit. But, you know, on COVID, we have some monster trades. Let me just quickly give you one example that it was massive on Wall Street.
By the way, why specifically 5 days? This is a very interesting question I had in my mind always. Yeah. Why specifically to get out of the trade after 5 days? Not 3 days, not 7, not 20. Why
and this is just based, you know, I want to show you this right now. You know, the thing about the 5-day rule to get out is that it is a very simple way for people, and for myself, I developed this for myself first and then for people. It's a very simple rule because we are doing swing trading. We are looking for that fast portion of the move, you know, after a leg. a consolidation, and then that 3 to 5 day move that happens. That's what swing trading aims to capture. People on stocks that look for bigger moves, they might be riding and holding through these corrections. That's not my style. That works in a very specific part of the market. But the 5-day rule, it works in uptrends, downtrends, choppy markets. So in every single market, you're going to make that consistent profit month after month, because on bull markets, it might give out some of that profits that if you continue to hold and trade, you will get. But most of the time, the market, when it's bullish, it's a little bit choppy, and once it made a move, it goes back down. So we want to sell into that strength. It's a simple rule that everybody can follow. It's super simple and keeps your equity curve going into all-time highs most of the times consistently. So I'm looking for that low drawdown and consistent growth. That's the point of this rule. It's a good, valid question, obviously, because if you, for example, on November 2021, before the peak of the whole market, if you've been trailing positions, you will be making so much more. But that's just a period of time. I want the strategy to perform in all periods, and that's the way it's constructed. It's a very good question. I don't get a question that much, but it's a rule derived 100% from data. I didn't make up. It's just comes from data that if you do that consistently, the account will grow consistently. So that's the answer.
Perfect. Thank you very much for that. Well, another question on that. Oh, I guess the answer already was given during this conversation we have to talk here, but still, there are many ways to develop systems, especially when it comes to moving average and momentum trading and breakout in stocks, which is classical. There are millions of different approaches to that specific. How did you develop this very specific approach with this set of rules? Like, was there anything that got your attention there, like in a very particular way, in a very
yeah, I get it, because if I show this, it looks so simple, and people will say, "Hey, I can do this myself tomorrow." But not so fast. The thing is that I have in order to pick the trade, I have a huge list of technical things I need to go through. For example, the first leg of the move, it's very important not to be to have many consolidations after a move. I look for the first consolidation, the amount of days the consolidation must have. I have a very specific number, like a bracket. If it falls short, I don't take the trade. If it goes over, I don't take the trade. If any of the candles of the consolidation closes for a short above the 20 EMA, I discard it. If it closes on bull trades, if any candle of the consolidation has one daily close below the 20, I discard it. Just like that, I have a big pile of rules that are 100% derived from data. I didn't make them up. They are proven. They are based on data. So I'm not guessing. I'm not taking it off my cuff, which people might think. No, this is everything derived from data 100%. So that's how I pick them specifically, because on any given day, once I have my charting software, which, by the way, on my homepage, there is, if you go through the link, you can have a free course where I show how I develop the system in detail. And I show you exactly that on every single day, once I'm scanning, I could have like 50 breakouts, but I only take 2. So there is a whole screen of things that go through in order to qualify for my specific rules. And then I have I would say 5% discretion to say, hey, this is the trade that is going for the signals, and this is going to be executed. And that's the trades that you can see in all of the reports on the homepage. Those are the trades. So there is a lot of filters, and the last one, a little bit, it's my own discretion. If you're in a very, extensive bear market, I'm not going to send out a long. Maybe if it makes sense, if it's a reverse ETF or something, we will take it. But I use common sense and a little bit of discretion on which trades, once I got them, to send. So there is, if you try to replicate this, but what I'm showing you right now, probably people will start to lose money tomorrow. So it's Absolutely. Not that simple. Yeah.
It's always like that. Which, you know what? Maybe you want to stop sharing the screen for now, or?
Yeah.
Which leads me to the next important question. As you said, there are the criteria there. That's what separates the strategy eventually for yourself and for your followers. I assume that there are many people who are watching this video who are either beginners, new traders, especially when it comes to stocks maybe, and or are new to the way you see the things. What would you say is the best path for them, or these maybe three most important things you would recommend them to focus on in order to find their comfort with the strategy, find their consistency with the strategy, being able to define a specific set of rules that they're able to stick to follow, right? It's not only about defining them, but also that you're able to stick to these set of rules, and of course, eventually to become a successful trader.
Well, I would say these are the three things that really stand out to me. Very easy. First one, I would say always, if you're going to open a trading account and start putting money at risk, you should know 100% what you're doing based on data. You should have, if you have a system or a method you're bringing to the table, before placing the buy or sell button, you should have at least 10 years of data of that system, and you could visualize exactly based on your risk level, how much money are you going to make per year, per month on average, how many months of the year you're going to lose money, how many months in a row you can have losing money or not making money or being break even or whatever. You want to know your drawdown, you want to know your max drawdown in number of trades, you want to know in percentage wise on your account, what is your drawdown going to be, you want to know how many losing trades in a row you can have. That's also very important. And you want to adjust the risk of your trading in order to make all of this make sense, for the profit to make sense, for the drawdown to make sense, because it's very common that you might have a system that can give you profits, but based on your risk level, but the risk reward is not that good, and you will get too big of a drawdown for the rewards you're getting. So it might be profitable, but it will be very difficult to trade. My suggestion, and I believe that you will say the same, is that focusing on developing systems with a higher percentage rate, success rate on the account is very important. So systems that have like 25-30% success rate on the trades, I believe it's very hard on your mind. Maybe you can say the same.
Even if the risk reward is 1 to 10, as soon as you don't profit enough times, and enough from my point of view is anything at least 50%.
At least, but yeah, bare minimum at least 50%. And people don't know that if you have a 1 to 10 risk reward system with a 20% success rate, by default, by definition, by statistical distribution, this is just the law of numbers. I mean, you're the mathematician here, not me, but you get me, by default, you're going to have a lot of losing trades in a row. Yes. With those stats, you could have 15 trades in a row that are losers. Can you withstand? I mean, psychologically going through that, it's very difficult. And you will have to be trading like 0.2% of your account in every single trade in order to not get your drawdowns too big. But then will it be worth it for the reward? We'll have all of these things and human psychology is not designed to, if you have 20% success rate, which again, I went through this trading futures, so now I know what I'm talking about. Waking up after the overnight session, opening up the computer and seeing like 3 stop loss getting hit, when I just woke up, it's like opening the laptop and getting, 3 punches in your face every single day. It's like, it's very tough. I've been through it. I don't recommend it to anyone. If you can get anything above 50% success rate, your job is going to be so much easier in the future. And again, that the first point will be that, and knowing what you're trading and knowing what to expect in the future. Don't trade knowing, let's see what happens. You should be already knowing what are the possibilities of what is going to happen. Second point I would say, and we talked about, is never risk more than 1% of your capital on any single trade. If you do that and you're not doing dumb stuff, very difficult to go broke, and you can stay in the game enough to learn it. So that's the second point. We talked about it, super important. The third one, which is, I believe it's not being talked about that much, is that take a weekend off, go to the woods or something, sit on a chair and just really think about what you want to achieve with your trading. Because some people they say they want to make money trading, but then in reality, they don't want to make money. They want to gamble. They want to show off that that they are traders in order to tell their friends that they're traders, but they're losing money. And there are many things that people come to the markets that in order to validate, many people, they're successful in their businesses and they want to validate their ideas and say, well, this is difficult, I'm going to prove it right, and the market is going to say what I think is going to happen. It might sound dumb, but many people go with that attitude and with that dumb mindset, and they end up losing a lot of money. And you really need to think about, and this is something that Ed Seykora talks about in the Market Wizards book in his interview that really struck me really early on, that the phrase says, everyone gets what they want from the markets. So you have to really think about, what do you really want from the market? Do you want to make money? It's very simple if you want to make money. You can.
That's a great saying.
Most people don't want to make money trading. They want to do it for something else, for their ego. They want to gamble or whatever. And that's the majority. That would be the top 3 things that I would say will really change everything for a trader.
Absolutely agree. I never thought about it this way, but absolutely agree. Most people come to that with wrong reasons. They're looking for answers to different problems in life.
Yeah, exactly.
And they are looking for answers to that from trading, right? And like anything in life, like gym or anything, define here, why are you going? If it's just to go because someone says it's healthy, because someone says it's good for you, you would be achieving 0 result unless you really change the mindset here and very specific definition of your reasons. And it's same with trading. So that actually leads me to probably the last question I wanted to ask you, and that's important. We spoke about bad periods. Which was your worst months, by the way, from all the years you were trading?
Right now, based on data, we have an 80% month loss. That was on 2017, if I'm not mistaken. That was an outlier. It's not very common. As I said, in 2017, I'm talking. It's not, it's very uncommon, but it could happen. And the thing about trading is that distributions, when something say, hey, this could happen, it could happen tomorrow. So, it happened to me once I started when I was trading futures, I was like, hey, you can get a 45% drawdown, but it happens once every 10 years. Don't worry, it won't happen for the next 3. And then you start trading, and 2 months later, you go down.
Yes.
So it could happen. It happened only once that got that big. But in overall scheme of things, most of the times, once we have a losing month, on the next month, we made it all back because it's just the nature of the markets. Because if we get a losing month, it's because the market was choppy and the system was not performing well. But most of the times, we always go from a choppy period to a trending period, either up or down. So we always get that money back pretty instantly. In just a few weeks, you can get that losses. So it's not a problem. And I designed it this way because going through a drawdown for multiple months, it's something that can drain you drastically on your psychology. And gets very difficult to continue to execute knowing that you're in a drawdown for the past 6 months. It's very tough. I've been through that, so I know from experience, it's super tough.
It is. Well, what's your take for people how to deal with bad periods? Because everyone will go through that, as you said, everyone. You, me, Warren Buffett, every name comes to your head will go through bad period. That period could be a day for others, a week, a month, a quarter, or a year. Or even few years for investors. It's something that in our mindset is not understandable, but that's something that literally everyone will go through. What's your take or recommendation for people doing it? And when is the moment you tell yourself, okay, Felipe, now it's time to take a break. It's clear on my period. Like it happened to me in December. The worst months of 2024, but also in the last many years, it was the worst months. At the middle of the months, I just said, okay, Vlad, that's it. You know what? Yeah. You either make it worse or you stop, refresh, reset yourself, and move on to the next month. So what is this moment for you, and how would you recommend to people to deal with it?
Yeah, well, over the years, I've been through that a lot, and I'm going to give you I believe, which is the best solution to go about it. But on my system itself, I continue to execute because by default, and this ties up to my answer, is that you should be knowing what you're getting into. And that's the, how to deal with a bad period. I believe it has a direct relationship with how did you prepare to begin trading something that got you into this in the first place, because if you're trading a system and you're going to get a 3 month drawdown, and you start trading that system, you should know that is going to come, and better make peace with that before it happens, because most people that go through a 3 month drawdown and they can take it and everything, they made a commitment to that drawdown before they started trading. So they didn't even know they were making that commitment. So the quick answer would be, for example, I'm not an investor long-term in the markets, just like you said, because you could get, if you bought in October 2003, you will have to wait, it was the number on November 2000, you have to wait until 2013, 13 years to break even. So I know that can happen. That happened only once, in a lifetime, but that could happen next year, So yes. I'm not going to do it because I know that's something that could happen, and I couldn't bear myself getting my money tied up to the markets 13 years to break even. It's something that I'm not going to ever do in my life. So the quick answer is I'm not going to be a long-term investor ever. That's it.
Right. So the correct anticipation and the correct expectancy is something that really solve a lot of psychological problems. I couldn't agree more on that.
Yeah, it's all about preparation, and knowing what you're getting into. Most people don't know what they're getting into,
But it's very important. I think very fair to mention also that knowing and being able to deal with it in real life is two different things. Like when you have girlfriend or your wife, that if you say something, it will put you in a wrong situation, but you still say that because in your mind the output could be different, but in reality the result is what is going to happen. And you still do, right?
But funny thing is that I'm saying this right now, but I went through that mistake doing the preparation, because I said on futures, it happened to me that I knew I could get this big drawdown, but I was just looking at the returns, and I said this could happen once in every 10 years. Well, it's not going to happen in the next 2 or 3 years. I'm going to trade this big account, and by then it doesn't matter because I will be making so much money beforehand that I'm going,
Absolutely.
But it happened instantly. So I knew this, the answer I'm giving you, I knew this already, and I made I went in with the wrong mindset, which is underestimating risk. I just was looking just at the profits and saying, once in 10 years, I don't care, it's not going to happen right now, but it will happen. Every single thing in the markets can happen tomorrow. I mean, people were telling me this many years ago, and I was like, yeah, maybe I was too young, I was like, yeah, sure, you old man, but now I'm
I always tell my followers, the market will always find a way to separate kids and men.
It's so true, yeah.
Always, right? And you decide to which category you belong. Are you a kid and behaving like a kid, or are you like a man and you are able to get hit, get the responsibility for things happening to you and not start blaming? It's critical. I was wondering in my head how it is for the listeners to listen to us, a Russian accent and a Latin accent speaking together. I'm wondering what is going through the mind of many of the listeners. It's been a pleasure, Felipe.
It's an honor to be here. Really, I had a lot of fun, honestly.
Me too. You're a great guy, and really I mean it. As I said, I got thousands of communications throughout the year. Only few things get true attention, and that's when you feel when the person is honest, transparent. You remember during 2024 I told you, let's start checking your report. I want to always work with people whose mouth, heart, and brain aligned. And that's when you act the way you speak, and when you speak and act in the same way, and transparency and honesty is the most important thing. These things are, I carry with myself. I'm a kid. My father always taught me. He still always repeated to me that treat people in the same way you want to be treated. Always in the high level. Always, regardless of the status, regardless of the position, regardless of anything.
Great lesson.
And that's how I choose to cooperate with people. And it's been a pleasure to have you here. I hope the listeners would be able to absorb all the information you shared and all your absolutely valuable tips in trading. And I know many listeners already heard these things or read these things from different sources, but these are the things we always constantly need to remind ourselves. Even with all the experience, you still need to remind yourself all these little things. Don't do that and do that, all the don'ts as they are. So pleasure and honor to have you here, man. For all the listeners, once again, you can learn all about Felipe's, I would say club. It's not a club, it's your service and the way he trades and all to get access for your reports, including 3 weeks, which you will not find probably anywhere, of a trial. Check if it is for you before you are actually paying for something. There is about, I would say, 70-80% probability from the data and the way I saw the data, also experience the data in 2024, that you will actually be profitable. Of course, nobody can predict the market and anything, but at least get yourself a chance to experience this type of trading, which is absolutely fantastically built and structured for people who cannot commit to trading in the way the trading is, who have day jobs, who are running businesses and or in a busy stage of life, who require to check the charts less, but want still to be involved and make it. So these reports are, from my point of view, are for you. I'm 100% confident you will find value in them in a way it serves you. Felipe, once again, thank you. Any few last words you would like to?
Well, thank you for the kind of words. First of all, I know that when we first get in touch, it was like I had to check everything for myself first before I say anything. And it was like you became a lifetime member of us just from the start, and you've been following it and trading it, and you liked it, and that's the whole point of Liberty Signal. Is to get a 3-week trial so people they can make a profit and just make the reports pay for themselves so they don't have to pay off pocket. That was my vision for it, and people are doing it and they're enjoying it. And I'm getting emails that, they are making money and they are grateful for giving out a 3-week trial on this. And, most services like this on stocks, on options, which is, where we are operating with the Liberty Signal, most require you to pay up from the whole year. Like, if you don't pay, like, for example, $2,000, $3,000, $5,000 up front for the whole year, you're not getting in or anything. And we also have yearly prices with discounts, but there is the trial and with a monthly subscription where you can just start for free and experience it. And again, just like you said, I would say 70% chance of making money. And if you open an account with any decent size account, you can just let the service pay for itself and enjoy it. And of course, on the link, if you go, there is a learn section where I have a lot of blog posts, video tutorials where I show more of the strategy if you want to learn more. I have a free course right there that you don't have to put your email. You just post it on the page on 4 videos. I believe it's like a 3.5-hour course on how I build the system in detail. If you want to try to do it yourself, of course, if you dare to do all the work I've done, you can do it. And if you want to piggyback on all of my years of experience and years that took me to brought this together, you can just follow the signals and that's it. So that's the whole point of it. So I'm really enjoyed on this podcast talking about trading, and I really hope people that could learn from both of our mistakes and just learn from that, because it's very easy, just like you said, you can read it on a book, but I'm saying that I went through and I wish I didn't do that. You said the same thing. So please, if people could just starting out, listen to our mistakes and don't do them, you're going to be so much ahead in life. It's just, compounding will be working with you so much easier, so much earlier. I'm sorry. So that's the whole point. So really enjoyed this one. Thank you very much.
Thanks, Felipe, once again, and looking forward. Hopefully, somewhere during the year we can catch up again, talk about trading after Trump is in his position and making his changes. It is expected to be a very interesting year ahead. So let's stay in touch. And once again, thanks for your time, man. Thank you very much, guys, for listening, for watching. And once again, I join Felipe's hopes that you will take something out of this conversation and discussions and apply in your trading. For us, it would be a win already if it helps you any way possible to improve your trading. All the best to you and yours, and good trading. See you soon. Speak soon.